What if the fastest way to make more money in the market is to risk less? Most traders believe the opposite. They think bigger positions create bigger opportunities. But what if that belief is the very reason they stay stuck in an endless cycle of fear, hesitation, and painful losses? The market doesn't destroy traders because they lack intelligence. It destroys them because it quietly exposes emotions they never learned to control. And the most dangerous part is that almost nobody realizes it's happening until it's too late. Imagine making decisions without panic after a losing trade, without greed after a winning streak, and without feeling the constant pressure to prove yourself on every single position. It sounds simple, but very few traders ever experience that level of freedom because they've been chasing the wrong goal from the very beginning. In this journey, you'll discover why trading smaller isn't a sign of weakness, but one of the greatest psychological advantages you can develop. How tiny risks can quietly build unstoppable confidence, and why the professionals who survive year after year often think in a way that feels completely backward to everyone else. But don't make the mistake of assuming you've already figured it out, because each chapter reveals another hidden layer of the mindset that separates consistent traders from emotional gamblers. And the final chapter contains the most powerful lesson of all, a shift so unexpected that once you understand it, you'll never look at risk, confidence, or success the same way again. If you've ever felt frustrated by repeating the same mistakes, share your biggest trading challenge in the comments because chances are thousands of others are fighting the exact same battle. If this way of thinking challenges what you've always believed, like this video, share it with someone who needs to hear it, and subscribe, because sometimes a single change in perspective is worth more than years of experience. Now, let's uncover the truth that most traders spend a lifetime searching for, but almost never see. Chapter 1. Why bigger bets keep you trapped in fear. Have you ever noticed that the moment you increase your position size, your personality seems to change? Your hands become tense, your thoughts become louder. Every small price movement suddenly feels personal. The market hasn't changed. You have. Most people believe fear comes from losing money. But that's only part of the story. The deeper truth is that fear appears when the amount you're risking becomes larger than what your mind can emotionally accept. At that moment, you stop reading the market objectively. You begin protecting yourself instead. Picture someone walking across a wooden plank lying on the ground. They move confidently because there is almost no risk. Now imagine placing that same plank between two tall buildings. The plank hasn't changed. The person's skill hasn't changed, but suddenly every step feels terrifying. Trading works the same way. The chart is still the chart. The strategy is still the strategy. Only the perceived risk has changed. And once fear takes control, your brain starts searching for safety instead of opportunity. You exit winning trades too early because you're afraid they'll disappear. You hold losing trades too long because accepting the loss feels unbearable. You move stop losses. You hesitate before entering. You chase the market after missing a move. One emotional decision creates another until you barely recognize your own trading plan. The painful irony is that many traders respond by trying even harder. They study more indicators. They buy another course. They search for a secret strategy. But the real problem was never the chart. It was the emotional weight attached to every trade. Imagine carrying a backpack that becomes heavier every mile. Eventually, even a short walk feels impossible. Most traders unknowingly fill that backpack with unrealistic expectations. They expect every trade to make up for past losses. They expect every setup to prove they're skilled. They expect the market to reward their effort. The market owes no one anything. The moment your self-worth becomes connected to a single trade, you've already lost something far more valuable than money. You've lost your objectivity. Professional thinking begins with a completely different question. Instead of asking, "How much can I make?" they quietly ask, "Can I remain calm no matter what happens next?" That question changes everything, because a calm mind notices opportunities that an emotional mind never even sees. The market isn't testing your intelligence, it's testing your emotional stability. And until your risk becomes small enough for your emotions to stay quiet, your true skill will always remain hidden beneath fear. But recognizing fear is only the first step, because there's an even more surprising reason why trading small creates an advantage that most people completely overlook, and that discovery changes the entire game. Chapter 2. The Hidden Power of Trading. So small, you stay unshaken. What if the greatest advantage in trading isn't finding a better strategy, but making your current strategy easier to follow? That sounds almost too simple. Yet this is where most traders miss the point. They believe confidence comes after a long streak of winning trades, so they increase their position size, hoping bigger profits will finally make them feel secure. But the opposite usually happens. The more they risk, the more pressure they create. And under pressure, even the best plan begins to fall apart. Think about learning to drive. When you're sitting in an empty parking lot, your movements are smooth. You notice the road, you stay relaxed. But imagine driving through a crowded city for the very first time. Suddenly, every decision feels urgent. Your hands tighten on the steering wheel. You overreact to small mistakes because your brain is overwhelmed. The car didn't change. The driver did. Trading follows the same pattern. When your position is small enough that a loss doesn't shake your emotions, something remarkable begins to happen. You stop watching every tick as if your future depends on it. You stop trying to force the market to do what you want. Instead, you begin observing what it is actually doing. That shift is subtle, but it's powerful. A calm trader sees patterns. An emotional trader sees threats. This is why small risk is not about making less money. It's about protecting the one asset that creates money in the first place, your ability to think clearly. Every trade becomes just one decision, not a life-changing event, not a test of your intelligence, not proof that you're a good or bad trader, just one decision in a very long journey. Imagine flipping a coin that slightly favors heads. If you bet your entire savings on one flip, fear would consume you. But if you knew you could flip that same coin hundreds of times while risking only a tiny amount each time, the outcome of any single flip would barely matter. That's how consistent traders think. They don't become emotionally attached to one result because they understand that success is built over a series of decisions, not a single moment. The market rewards patience far more often than excitement. It rewards discipline far more often than courage. And it quietly punishes anyone who believes they must win today. The surprising truth is that trading small doesn't slow your progress. It accelerates your growth. Because every calm trade strengthens the habit of discipline. Every controlled loss builds emotional resilience. Every rule you successfully follow becomes another brick in the foundation of lasting confidence. Eventually, something incredible happens. You stop entering trades because you're desperate to make money. You enter because the opportunity genuinely fits your plan. And when that transformation begins, consistency is no longer something you chase. It becomes part of who you are. But even that isn't the biggest breakthrough, because the next lesson reveals why tiny risks don't just protect your account. They quietly build a kind of confidence that almost nothing can destroy. Chapter 3. How Tiny Risks Build. Unbreakable confidence. Most people think confidence is something you earn after a big win. But what if that's the greatest illusion in trading? A trader who feels confident only after making money will lose that confidence the moment the market takes it back. That's not real confidence. That's temporary excitement wearing the mask of certainty. Real confidence is much quieter. It doesn't depend on today's profit. It doesn't disappear after tomorrow's loss. It comes from knowing that no single trade has the power to define you. Imagine a professional basketball player standing at the free throw line. Even the greatest players miss shots. They don't walk off the court questioning their talent because of one mistake. They understand that one shot is just one moment in a much bigger game. Trading demands the same mindset, yet many traders do the exact opposite. One winning trade makes them feel like geniuses. One losing trade convinces them they've forgotten everything. Their emotions rise and fall with every candle on the chart. That emotional roller coaster is exhausting, and eventually it becomes more dangerous than the market itself. Now imagine a different trader. Before entering a position, they already know exactly how much they're willing to lose. It's such a small amount that if the trade fails, nothing about their day changes. They don't need revenge. They don't need to make the money back immediately. They simply record the result and wait for the next opportunity. At first, that approach seems boring. But hidden inside that boredom is extraordinary power. Because every time you experience a loss without emotional panic, your brain learns something new. It learns that losing is not a personal attack. It learns that uncertainty is normal. It learns that discipline keeps you safe. Over time, this creates a powerful psychological shift. You stop fearing losses. You start respecting probability. And once that happens, your decisions become cleaner. You no longer force trades out of impatience. You no longer chase candles because everyone else is excited. You no longer confuse action with progress. Think about building a house. No one begins with the roof. Everything starts with the foundation. The foundation isn't exciting. Nobody celebrates it. But without it, the entire structure eventually collapses. Small risk is that foundation. Each disciplined trade is another brick. Each emotionally controlled loss adds strength. Each patient decision makes the structure more stable. One day, you realize something has changed. The market is still unpredictable. Wins and losses still come and go, but your emotions no longer swing with them. You've stopped trying to control the outcome. You've learned to control yourself, and that's the moment confidence becomes permanent, not because you've mastered the market, but because you've mastered your own reactions. Yet there's one final transformation that separates truly consistent traders from everyone else. It has nothing to do with predicting the market. It has everything to do with the way they define success itself. And once you understand that shift, you'll never chase a big win the same way again. Chapter 4. When consistency becomes more powerful than winning big. What if the traders who build lasting wealth aren't the ones who make the biggest wins, but the ones who need them the least? That idea feels almost backwards. We're taught to celebrate the trader who doubles an account overnight. Social media rewards dramatic victories. Headlines glorify massive gains. It creates the illusion that success is explosive. But real success is usually quiet. Picture two people climbing the same mountain. The first sprints ahead, ignoring the steep terrain. For a while, they look unstoppable. But as the climb gets harder, they run out of energy, lose their balance, and begin sliding backward. The second climber moves slowly. One careful step, then another. There is nothing exciting about their pace. No one is cheering for them. Yet hour after hour, they continue moving higher while the first climber struggles just to recover. The market rewards the second person, not because they are more talented, because they are more sustainable. Most traders secretly believe every trade should change their lives. That expectation creates enormous pressure, and pressure quietly changes behavior. You stop waiting for quality setups. You convince yourself that average opportunities are good enough. You trade out of boredom. You trade to recover losses. You trade because you don't want to miss out. Without realizing it, your decisions are no longer guided by discipline. They're guided by emotion. Now ask yourself a different question. What if your only goal today was to execute your plan perfectly? Not to make money, not to impress anyone, not to prove you were right, simply to follow your process with complete honesty. At first, that goal feels almost meaningless, but over time, it becomes the most valuable habit you can build. Because every correctly executed trade strengthens your identity. You stop thinking like someone chasing profits. You start thinking like someone who protects their edge. That's a completely different mindset. Imagine planting a tree. You don't dig it up every morning to check whether the roots are growing. You water it, you protect it, you give it time. Growth happens beneath the surface long before anyone can see it. Trading is no different. Your discipline grows long before your account does. Your patience grows long before your profits become consistent. And your identity changes long before the world notices the results. One day, people will look at your success and assume you discovered some hidden strategy. They won't see the thousands of small decisions that created it. They won't see the trades you didn't take, the risks you refused, the emotions you controlled, the rules you followed when no one was watching. That's where consistency is born. Not in extraordinary moments, but in ordinary decisions repeated over and over again. And eventually, those ordinary decisions produce extraordinary outcomes. But there's one final lesson that ties everything together. It's the mindset that allows experienced traders to stay calm while everyone else is trapped in fear and excitement. Because in the end, the greatest advantage in the market isn't a strategy. It's becoming the kind of person the market can no longer control. Chapter 5. The Quiet Mind that eventually owns the market. What if the greatest victory in trading has nothing to do with making money? At first, that sounds impossible. After all, isn't money the reason people enter the market in the first place? Yes, but the traders who stay focused only on money often become its biggest victims. They watch every price movement with hope or fear. Every gain feels like validation. Every loss feels like failure. Without realizing it, they give the market complete control over their emotions. And once the market controls your emotions, it begins controlling your decisions. But there comes a moment when everything changes. It's not after your biggest winning trade. It's not after discovering a magical strategy. It's the day you stop expecting certainty from an uncertain world. Imagine standing on the shore, watching the ocean. You don't become angry because the waves keep moving. You don't expect the tide to obey you. You understand that uncertainty is part of the ocean's nature. The market is no different. It will rise, it will fall, it will surprise you, and it will never ask for your permission. The only thing you truly control is how you respond. That realization is incredibly freeing, because once you stop fighting uncertainty, you stop wasting energy on things you cannot change. Your attention shifts inward. You become less concerned with predicting the next move, more concerned with executing the next decision. You stop chasing perfection. You start pursuing consistency. You stop measuring success by today's profit. You measure it by today's discipline. And something remarkable begins to happen. The emotional noise slowly disappears. Greed becomes quieter. Fear loses its grip. Impatience fades. The market still presents endless opportunities, but you no longer feel compelled to chase every one of them. You wait. You observe. You act only when your plan tells you to act. That patience isn't weakness. It's strength under control. Think about an experienced chess player. They don't move a piece simply because it's their turn. They wait. They study the position. They understand that sometimes the strongest move is the one you don't make. Professional trading follows the same principle. Every unnecessary trade avoided is a victory. Every rule followed is an investment in your future. Every small, controlled risk is another step toward long-term freedom. Eventually, you realize the market was never your greatest opponent. Your impatience was. Your ego was. Your need to be right was. The real battle was always taking place inside your own mind. And once you win that battle, the market begins to look completely different. Not because it has changed, because you have. That is why trading small leads to something much bigger than larger profits. It builds discipline that cannot be shaken, confidence that does not depend on outcomes, and a mindset that remains steady through both winning streaks and losing streaks. In the end, the traders who last the longest are rarely the loudest or the boldest. They are the calmest, because they understand one timeless truth. The market doesn't reward those who try to conquer it. It rewards those who first learn to conquer themselves. If this journey changed the way you think about trading, let others know by liking this video, sharing it with someone who needs this perspective, and subscribing for more insights that go beyond charts and strategies. Remember, the biggest edge you'll ever have is not hidden in the market. It's hidden in the mind you bring to it.